The Asia-Pacific Economic Cooperation Group, or APEC, expects the region's economic performance to be weaker this year. It cut its GDP growth forecast to 3.2%, shaving a full percentage point off its last projection 3 months ago. Well, APEC says that the war in Ukraine is the key reason for slowing growth. Other factors, such as rising interest rates, the ongoing pandemic, and increasing public debt, aren't helping the situation. Inflation in the region has also risen to an average of 4.5% in the first quarter. Now, that is up from 1.8% a year earlier.
Is because of the growing concerns and downside risks from inflation particularly, and much of that inflation has been driven by, unfortunately, the protracted conflict in Ukraine. That's driving up energy prices and fuel prices, food prices, and those have some serious implications in terms of looking at growth numbers. One of the concerns that we're worried about is rising protectionism, trade protectionism. So I think what's important is that to try to get economies together and do the best not to think inwardly and try to see that we need to work together to ensure that we can continue to allow goods to move across borders, particularly essential goods in times of crisis.
APEC released the statistics today as the group's trade ministers gathered in Thailand for their first in-person meeting since the pandemic. APEC is made up of 21 Asia-Pacific economies, including most ASEAN nations, the US, China, and Russia.